Everyone to the Tools of the Trade live stream. I'm your host, Captain Cole, and I'm joined by my co-host Trip, better known as Crypto ISO on Crypto Twitter. We got an awesome episode for you guys today, but lots to talk about, lots to get into. But before I get started, would you please do me a favor, smash that like button, make us look good for the YouTube algo. Also want to take a quick second to thank our sponsor Phemex, one of the only non-KYC derivatives exchanges left in crypto. Click the link in the description below to get up to $6,000 in sign-up bonus. Now, the last thing I'll say before we get started here on Tools of the Trade, we are not financial advisors, and this information is for educational purposes only. Welcome, everyone, to another episode of Tools of the Trade. Trip, my man, how's it going?
It's good. How you doing, man? I'm on the left side today.
You're on the left side. That way I can see you. Yeah, I'm good, man. It's good to be back for another episode. We got some good market volatility last week, right? Retraced a lot of that huge move on that ETF grayscale news, and now we're back to square one. So it's going to be good to kind of talk about the markets, see where we're at and where we're headed. Before we jump into that, let's kind of get your quick and dirty take on macro. I know there's not too much going on in terms of like events, but I'm sure there's good stuff to talk about in the chart.
Yeah, I mean, it was kind of interesting the way risk traded alongside crypto in the face of, we got the Jolt job numbers, right? So I think that was the first indication that maybe there was some softening in the labor markets, which, the Fed has been talking about. So how the market reacts to that is always interesting. And then we had NFP, right? So if we're just looking at the chart of, let's just say ES and NASDAQ, these are small, but why don't I actually make this larger so we can see it? Like the 50-day moving average has been an interesting kind of line that this has followed since March 29th, right? So
Yep.
You have this like consolidation underneath here, and it almost looks like an inverse head and shoulders, kind of, right? Like you have this, and we've broke above it, and now so we've kind of, what was it, on the 16th of August? We dropped below it, but now we've reclaimed it and are retesting this. So this is a pretty interesting time right now for S&P 500 equities as a whole, because like, are you going to hold this and then continue up, and are we going to march to new highs into the end of the year? So it's kind of early to tell, but this structure and this structure are both interesting, as well as this, right? Like we deviate the 50 and then we kind of reclaimed it. So are we going to do that and continue marching up? And the dollar being at kind of that 105 level, which is where we were looking at, and it breaking kind of the downtrend, and we'll look at that. But I want to look at the NASDAQ too, is setting the stage for an interesting fourth quarter. Let's call it that. So if we look at NASDAQ over here, it's a little slow. Sorry, guys. We can see like, again, like where did we break above the 50-day moving average on this? This was March 14th, around here. I mean, we retested it, but we broke out of the 50-day moving average really like closer to the start of the year. And that's because I think the tech trade and obviously select names have been leading the market, right? So here we are, there's a deviation below it, we broke above it. So is this the same thing? Are we going to bounce here and continue up? It's too early to tell. I mean, I kind of think that risk keeps trading up into the end of the year. I believe we have CPI on September 20th, if I'm correct. We can look at the calendar. But if we look at the dollar over here, we'll share to this one instead. You guys see the dollar here?
Yep.
Yeah, so we had kind of talked about this like downtrend line, which has existed for beginning of March, right? So is this the start of something higher in terms of like the dollar essentially pushing up? Because we're at the 38.2 Fibonacci of literally the whole move, right? Like here to here. So does it run out of steam here, or are we going to push like up to like the 50 and the 61.8? If this is where it stops and pulls back here, like, and this is call it a deviation or a fake out, You're going to see risk trade up, obviously. If it keeps pushing up to here, then you might see a further pullback in equities. How crypto trades alongside that is like completely different in my mind, as we've seen. If we look at just this chart, which is, hold on a second, obviously the Bitcoin versus ES. So hold on.
Bottom range of the bands.
Yeah, we're at the bottom range, but like really not showing that much strength. You could come down to this pivot realistically. So, if you step back away from the technicals and you just look at the information, that we've kind of had in the markets, and like what's the bullish narrative, like what's driving crypto prices. Well, it was largely ETF driven, right? The hope of something that was going to come. And so we just had all of them get delayed, right? So
which was inevitable, right? I think very few people actually expected it to be approved in its first go, and those who did, sorely mistaken.
Yeah, well, we had two different dates, right? Well, we knew it was the Friday and the Saturday, and you're not going to get something on Saturday, but they did it on Thursday, if I was correct, right?
Yes, they did.
So they were just, when it rains, it pours with anything. And it was just like a slew of all of them delayed, right? So that's like popping the balloon of the one thing, like, taking the air out of the market, right? So what's going to put the air back into the market, like, as you get closer to some of the next dates of where you could hear about something. But for the time being, like, it seems like just from a, what's going to make price go up right now.
What's the narrative right now?
It's like I don't fully see it. And so if the dollar keeps going up and risk actually does pull back, and this is a deviation, then I don't think you're going to see any sort of rotation into crypto as an underperformer, just because there's nothing near term that's going to really provide like the strength in the market. So as we get closer to the CPI, end of September, we can start to take a look at it. But, we talked a lot about, the Bitcoin chart, and this is where we can kind of transition over to what the bulk of the episode will be about. Is like, one, we lost the 200-day moving average. We retested it. We traded two times, 2 daily candles below it. I had put the short in the Telegram. You've been short. Then it was 27.1 or 27.2. And like all the ETFs got delayed, and then, we had the big drop, right? So now it's like everyone's guessing to see, is this consolidation before another leg down, or do you get a squeeze? Given how much the deltas have flipped, and we can look at this, I think like the steam for the squeeze is really running out, and it was a timing thing for me. But yeah, that's kind of like how risk, macro, and Bitcoin and narrative driven things are kind of tying together for me right now. But you can pull up like your own charts, and we can look at like.
Yeah, I'm going to take a quick sec to talk about the DXY, because you brought up in a good point, and the reason I want to talk about it, because you talked about that diagonal. I won't redraw it. It was a clear breakout, right? But everyone knows I'm an Ichimoku trader. Trends are my favorite thing to trade. Ranges, I put that to ISO in our liquidity theory when the time is right. But as it pertains to the DXY, right, and this is what I think everyone needs to understand, is for the longest time, people forgot about the correlation with the DXY, and the reason being it was in the range, right? You have the range low and the range high, and it's just traded in ping pong between the two. And whenever it hit the range high, there wasn't really much of a reaction in the crypto space. But now that you kind of drew that diagonal, right, like we broke out from this diagonal, it was a clear breakout. And then I threw on Ichimoku when I saw that. So Ichimoku, for those who don't know, I talk about this often, it's a trending indicator. And one of the setups besides the edge to edge that everyone knows me for is the Kumo breakout setup, right? So the Kumo breakout is basically a trending breakout if you have like an EMA crossover, for some who don't know. And what that says is this: when the blue line, the Tenkan-sen, is above the L line, and there's a cross right here, when the cloud flips from red to green, so from bearish to bullish, which is right here, your Kumo twist, and when the Chiku span, which is your basically price plotted back 30 periods, is above the previous price from 30 periods ago, that means we're trending, right? So we have all the prerequisites for price trading outside the cloud, trending compared to where it was 30 periods ago, having that crossover, and then on top of that, when you had that actual breakout, you had the retest on the Tenkan-sen. So if I was looking to get long, this entry on the blue line would have been perfect. And then we're looking, okay, so in my mind, DXY is trending. So that's terrible for risk, right? So that's why I have a very bearish stance going into the rest of the year. I really don't think we're going to get any relief rally up until October when I guess, Astro tells me we're going to get a little dead cat bounce. But before that, I don't see anything. And you're saying, you brought up the 38.2 fib. Well, I like my Kijun-sen on the weekly. That right now is around 107. So this is your mean reversion. 107 is my current DXY target. 107.2, 107.1, whatever the case is. I think the DXY is going to trade up there going into basically October. So I can see this basically trading up into here, up until October, potentially rejecting, coming down here. So around October, and it kind of lines up with that Astro Day we talked about it several times with Nick on the stream and then the last stream as well. That lines up for me that this is going to trend upwards into the October, potentially reject on the 50% fib, which is the Kijun-sen, and then pull back. So while this is trending upwards on the DXY, I full-heartedly believe that basically risk is going to trade down and BTC along with that. So if we pivot now to the BTC chart, I'm not going to use Ichimoku here because we've been in a giant range for the last however many weeks, 3-4 months. So you could say this is a Kumo breakout to the downside. And then if you throw on the 12-hour, this is usually the time frame I prefer to look at Bitcoin. When we had that ETF news about Grayscale beating the case, oddly enough, it went right to the 50% fib, which is a 12-hour Kijun-sen, rejected. And I even said it right at 27.9. This is going to retrace the entire move. It reminded me a lot of the Xi candle that we had in 2019. For those who don't know, that was basically China approving Bitcoin once again after many times of being blocked or banned, whatever the cause was. And this candle right here, which happened in a 2-day period, it was essentially a 40% move from, call it 7.5K all the way up to 10.5K. So it was a 40% move. And, as you can see, it basically bled all the way back down below the point of origin, broke those lows, made some sort of triple bottom before going higher. So point being, this price action, this 40% move, reminded me eerily enough on the back of China news, reminded me a lot of the Grayscale news, hence why the 27.9 short was key for me. I did get squeezed around here, but I doubled down back on this Kijun, and it was a very good profitable short. I'm still holding it. I do think we're going to go back to, if I look at the weekly here, I do think at bare minimum. So, we talked about the edge to edge setup several weeks ago, back when we were here, right? So your stop goes below the cloud, we're under that. The target of 42K is not feasible right now. So in my opinion, if we're looking at Ichimoku Bitcoin on the weekly chart, this 50% move, 50% retracement dynamic called the Kijun-sen is at 23.6. So I really am not expecting any sort of dead cat bounce whatsoever until we retest this level. In the best case scenario, we can come back into here, consolidate, and then maybe attack the underside of the cloud at 27.7 somewhere in October, November, right? So you bottom in October and then maybe have a move in November. So that's the earliest bullish scenario I have. However, I'm going to be the bearer of bad news here. I think there's a lot of unswept lows that are going to get swept, namely this 19.5K low, mostly because we have like a CME gap around 20.8K, which basically corresponds very closely to this 19.5K low. And then, of course, we have the yearly open right around 16.5K. And this bullish candle that has no lower wick at 17.1K. So, 20K, 17K, 16.5K. I'm not necessarily calling for new lows, but it wouldn't surprise me. Now, as far as from the short side of things, this is where I would take some off at 23.6. I would take some off at the CME gap around 20K. And then, the ultimate target, if we're so lucky to go back there, the yearly open, but for me, really this flat weekly candle at 17K, that would be the final target on a swing short. So that's kind of the down and dirty for Bitcoin. I am expecting, this is very reminiscent of the 2019 echo bubble. Again, it didn't have a blow off top, but it did have, 3 or 4 months of consistent uptrend. And now it looks like we had some distribution. This was an upthrust on the BlackRock ETF decision or ETF application. And then, this wick here rejection was the Grayscale winning the case. So, in terms of catalysts now, guys, I don't see the bullish narrative to go higher just yet. And I want to bring up two things, right? So the first is the ETF narrative is obviously the most prolific narrative we've had in crypto since probably inception, since Mike Novogratz in 2017 was talking about the herd is here. Here come the institutions. They're going to buy our bags. Well, they bought the top and on leverage, and look what happens, right? So point being is now the other narrative that everyone's waiting for to drop is the Binance DOJ news, right? It's been kind of talked about and hinted at that the DOJ is figuring out what's the best approach for kind of bringing down some sort of case against a criminal case against Binance. Now, in my opinion, this is actually going to end up being a bullish event. While most people are waiting for this, shoe to drop. Is Binance going to get charged criminally? Is CZ going to go to jail? I think it's going to be less antagonistic than that. And what I mean by that is, when there's a DOJ comes down with a fine, it's going to be a very hefty fine. It'll probably be in the billions. But let's assume, Binance is liquid for at least a couple billion. As long as it's under $2-3 billion in fines for, from the DOJ on the Binance and then CZ stepping down, I think that's actually a bullish outcome, right? So it's short-term bearish, long-term bullish, because what we really need for a spot ETF to be approved is for Binance's quote-unquote market share to kind of be controlled in that sense, right? From my opinion, the SEC and the global hegemony of the US dollar is waiting and saying, hey, the ETF is a great idea, but we can't leave this in the hands of CZ and China to kind of control and manipulate the price. So they need CZ out of the way. How do you do that in an orderly fashion where you're not destroying the chart and causing people to panic, causing a bank run, causing new potential lows? So I think the best way this happens, and I'd love the astrology to line up with this, is in October to get news that CZ has been charged by the DOJ. It's a $2.5 billion fine. CZ has to step down, say he's going to go spend time with family. And that ends up being potentially a wick down to yearly open 16, 17K, and then immediately gets bought up. I think when you get the Binance DOJ actual news happen, I think that's actually going to be a buy the news event, because it's been pressured so often now that people are waiting for that shoe to drop that the anticipation of the bearish event has kind of outpaced what the expectations have outpaced reality. So when it ends up actually happening, I really don't believe it's going to be this negative bearish thing. We're going to nuke 40%, whatever the case is. That has been priced in my mind. That's kind of the over down and dirty on Bitcoin on the higher time frame. Trip, do you want to kind of zoom in and give us a little more detail as we talk about the deltas and liquidity?
Yeah, I just want to go back to my Bitcoin chart, because I don't know how many times I've talked about the significance of breaking the 200-day moving average to the upside, retesting it, and staying above it so we broke below it August 17th. Well, I guess up here basically one candle. But we've been above it since January 13th. Like the significance of this to me from a trend standpoint, if you're looking outside of market structure, is like very big, right?
Yep.
And the reason why I took the short on it was because we traded above it, tried to hold it, and it was like this has to fail here, and then we got all the news, right? So I did close basically around here, tried along based on the deltas, which we can talk about. But I think the point is when you break below the 200-day moving average, you don't. It's rare that you recover it very quickly. On average, if you're looking at these lengths of time, especially some of these accumulation things, it can sit there for below it for a while, and that's an indication of one, you broke the uptrend and the 200-day moving average. The bullish case right now for me is we need to still go down further. I'm not sure how much further we're going to go down. But if you were just to look at if you're going to say that this is the swing high on a macro basis and from off of our lows, your 61.8 is 21.7. As you know, Zorn talked about the Kijun on the weekly being 23.7. As we know and have spoken about at length, where's the biggest monthly liquidity pocket? 23.6.
Yep.
So we're sitting at a 38.2 right now, which you can argue that this was the bounce on that, right? So, and it was sold. So is it going to bounce here again? Do I think we can fill a little bit 26.5, 26.4? I do, I don't know if it's going to happen, but I will say if you get a spike on Bitcoin or anything, it is a short entry in my mind, just because like this will just likely be a lower high and continue to bleed down.
Sell the rips. That's the strategy right now.
Yeah, sell the rips. Okay, and so we can look at Ethereum too, just to see, right? Again, like you guys see the Ethereum chart here.
Yep.
So here, same thing. We broke the uptrend, broke below the 200-day moving average, like through it, and very similar. And now we're here, right? So again, like it's super similar to me. And if we draw a fib, because I haven't actually taken the swing high on this to the low, which I guess let's just say from the bottom, like this part right here, which switch it. What's the yearly open on Ethereum?
I want to say, let's check. Yearly open is 1195, just shy of 1200.
Okay, so even so 1480, right? That's your 61.8 on the whole thing. This is similar to your 19.5 weekly wick on Bitcoin, right?
Yep.
So is Ethereum going to not run these lows after it's broken? You could say that this has already broken market structure on this swing low, because this was like the BlackRock candle, basically.
Yeah.
So you've lost the trend. You're below the 200-day moving average. Now 50 has crossed through the 200, which I didn't even notice that. That's called death cross.
Yep.
And so the posture of these is all like way different than the posture of an uptrend, right? So just visually, like it doesn't really, it's hard to get bullish, right? Things can squeeze, but again, the mindset should be this is going lower most likely. All right. So now we'll look at the liquidity aspect of things.
So before you talk about that real quick, just on the ETH point of view, ETH BTC is interesting, and we'll talk about that a little bit later in the stream. But ETH BTC, as we know, it's been in this 2-year range, just sideways with some deviations above and below. The CME launched their ETH BTC futures product in end of July. And I really thought I still do think that was almost like a generational bottom on ETH BTC. And what that really tells me is that right now we're setting the stage for when, we're going to talk about the liquidity going down to 23K, et cetera, and lower. When we do end up tapping these liquidity pockets, I wholeheartedly believe that ETH is going to actually show a lot of resilience on the way down. So what do I mean by that? ETH BTC is going to go up because this is, to me, the most important order block that's been in ETH since June of 22, so over a year and a half almost, or a year and a few months. We held this block multiple times. I think this block is going to lead to us going back to near the range highs of 0.08. So what I'm expecting to kind of happen as we dip down into these lower liquidity blocks we're going to look at on both BTC and ETH is that this block's going to hold, and ETH on the way down is actually a lot more resilient than BTC. So if BTC goes to say 23.6K, ETH might not go as low. So it'll be like 0.066 times 23.6, whatever that ends up being. Point being is it'll hold better. And what does that mean for me from a liquidity standpoint? ETH having relative strength on the way down is a very bearish sign. And this tells me that the bottom is not going to be in that as quickly as we'd like. So we're going to get a dead cat bounce around X levels, but that is going to end up being just like we're saying is a dead cat bounce. Because if ETH BTC starts pushing up as the market's dipping, that's very bearish, saying that they're using ETH BTC to kind of quote unquote hold up the market. So when we do eventually get this dead cat bounce, I think it's going to be a rally for selling. I don't think that the first significant bounce, so what I mean to say is I don't think the first significant bounce we get in the market, whether that's at 23.6K or 20K or wherever it ends up being, I don't think that's the, quote unquote generational bottom. Let's go to all-time highs, new bull market, etc. Because of the way it's shaping up that ETH BTC is going to move up higher while the rest of the market is dipping. But yeah, let's talk about some liquidity, Trip.
Yeah, I don't disagree with that. I also think that like people need to step back and understand how much time it takes for like certain things to play out, like in particular in spot ETF being approved, right? Like when did we hear about it? June was when
Yeah.
like BlackRock came in. That's when people started to get a lot of confidence. I mean, it's September, but like on a regulatory basis, like how long things take to play out, it's like, okay, maybe next year.
Yeah,
That
that's the thing, right? There's 4 deadlines, right? So there's one, the first, second, third, and then the final deadline. And that final deadline extends to mid-March, I think March 15th or March 14th. And that also coincides with the Bitcoin halving. So there's a lot of catalysts and a reason why I don't believe that they're going to necessarily approve it on the second deadline in October or the third one even in January necessarily.
Yeah, I think you also just look at the chart and look at those levels. And if you look at how long some of the distribution took on the top side, like it's painful and it takes a lot of patience to sit in shorts for like even to get to where it is now, right? So like
Yep.
accumulation on the flip side is like, or people buying up all the supply that everyone has just dumped, like that takes time too, right?
Yep.
So they all kind of go together.
And you have to keep in mind the way BlackRock thinks and operates. If you want to do the whole game theory on, legacy institutions are buying our bags, etc., they're not buying at 30K. Let's just pretend that we're playing the whale game. Institutions are accumulating, right? If they sent BTC back above into the 30, 60K range, it would be much harder to quote unquote suppress price, accumulate cheap Bitcoin, trying to, slurp up the dip for their spot ETF. So it makes a lot more sense from a game theory perspective if we want to go out on that, tangent and say, okay, well, the best and easiest way for BlackRock to accumulate more Bitcoin is to keep it between, say, 15 to 30K, keep ping ponging in this range. Whenever it gets to the 30Ks, distribute and sell back down. Because if you look at the way, just to take a quick second, if you look at the way Bitcoin kind of distributes at these tops, they're not the kind of tops we see blow off tops that we're used to from the traditional way. They're very slow drawing out distributions, like you're saying, Trip. And like the way that they kind of form structurally, they don't even like have a harsh reaction down. They kind of just go back to support, wiggle their way back up, go back to support, and etc. Similarly here, right? We didn't just have a large drop; there was still like a big flush. So point being is the way that price is distributing reminds me of like in the grander scheme of things, like a larger accumulation that's being drawn out. And if we want to go the game theory route, okay, well, they haven't been finished accumulating all the Bitcoin they have. I'm going to assume that, there's more Bitcoin to be slurped up in this region than, sending it from here higher, all-time high for ETF approval. So that's just my kind of game theory take on it. But let's get into the liquidity, Trip.
Yeah, I mean, you could also look at like the May timeframe to June, a month,
Yep.
back in 22, and like you can pull this up on your chart. Like we retested the 200-day moving average on March 29th, 2022, and like that was it. Like we did not break above it until
This,
January
right?
13th, right? So we like spiked up, kind of like we did off of like June, right? So what went March 13th, 37 to 48, and then we dropped, but like this time frame of like May to June, like the way it kind of consolidated and did like ripped up, like but selling all those rips, and then you had the like literally like break down from 28 to
Yep.
17. I don't know the event that's going to cause that, if it even did that, but like I don't know. I could see this kind of messing around here for a while and really testing the patience
That's
of.
the other thing, right? Like we have the Mount Gox distribution. I'm not even sure when that's supposed to be. I've heard the most recent is October. I don't see BlackRock ETF being approved without them being able to slurp up these cheap Mount Gox Bitcoins being sold at the lows, right? Or sold in this lower range. What's the incentive to have this, pump to 40K, have Mount Gox get released, and then have this, dump back down to what, flip 30K? Maybe, but if I'm BlackRock and thinking from a game theory perspective, this 30 to 15K range is much easier to accumulate in than once you're in the 30 to 60K range.
Yeah. Yeah. All right, now we'll switch to liquidity, take off our tinfoil hats and all sorts of things. We'll look at the numbers here. So the interesting thing to about like how this, and we had put in the chat about like sometimes you see consolidation and you see a very high delta, like in terms of shorts, and then 4 or 5 days can go by and you start to see the positioning change, right?
Yeah.
At the peak, there were 17 billion in shorts on Bitcoin.
Yes.
which is actually why I closed mine. Like one, I'm just take profit, cool, reassess. It
Catch and
looked,
release, everyone.
yeah, catch and release. It looked like it could have squeezed, but like there was an element of time that it needed to happen, and the one thing that you also needed to watch was like this cumulative lick delta. Like look at this profile now, right? Now we're only looking at 440 million in shorts on Bitcoin, and it's 180 to 152. And if we just look at this visually, right? Like here's your range high, here's your range low. Like the price is trading between two liquidity bands. And you look at this is where I've kind of spoken about how if we look at a 12-hour liquidity map, which we will, it's going to show you that like 26.5, like this area, and then like running 25K are going to be the areas where you may see like some short-term bounces or something. So to me, it was like, well, nothing's happening. Now we're losing the ability to squeeze either side. So you just see people like
Positioning getting chopped up.
getting chopped up trying to this is just absolutely like a bad idea to try to you're guessing. The two edges we have are looking at the ratio and the notional, right? So if we look at the notional, there's nothing's telling us anything. If we look at the ratio, like there's nothing telling me anything. To me, it's
And
like
it's a 1% range, guys. Keep that in mind.
yeah,
Like this is literally a 1% range. So I'm
no
not sure what
reason
you
to,
guys are doing trading this.
no reason to be in the trade, right? So like here, like this is what we're looking at from like the liquidation level standpoint. Now we'll go over to the liquidation heat map and like start to dive into those larger pockets, right? And let's go to just look at the 12-hour.
That's ETH. Just put on BTC.
What?
Oh, that's
Oh,
ETH. Yeah,
oh, I stopped sharing. I think you confused me there. Hold on 1 second.
you're good.
Hold on. Yeah, here we go. It might not have refreshed. That's why when I switched it. Can you see it now?
Share screen.
It should be sharing it.
No, but I'll throw on mine while you get that one sorted.
Here, I got it. It's good.
You got it. Yeah.
Guys, I'm not a tech guy. I'm a trader, or at least aspiring trader. So yeah, I mean, so here we have BTC on the 12-hour, right? So we'll zoom in here, and we'll make it clear for you guys. If we just look at the liquidation levels that we just looked at, we're looking at basically 26K, like right here, and then you hit a gap, and then you get into that like running 26 right into this area. Like this is probably a short if you got this because look, price needs to push up significantly through this gap. Like you could argue that like 26K, but if you got this 26.1, like probably you're running out of steam here. Now, if you look at the downside, what is this 25 to 25.7 again? Then there's a gap to 25.4, 25.2, and then you'd be running that 25K into the lower band of that like liquidation level bubbles we just looked at. And this is where like maybe it's a short,
you sweep that low.
a long. Maybe this is a long, right? And it's just like prices here in between all this stuff. It's just not really anything I want to be doing.
It's not providing an edge in either direction. If you don't have an edge, why trade it? You can gamble it, but just keep in mind you're trading without an edge. So, statistically speaking, your likelihood of pulling profit every time you take a trade like that is close to zero.
Yeah, you're
over
watching
a long enough time span. Yeah,
you're watching paint dry. You really should just set alerts and all on those levels and like watch what price does around. Don't just blindly bid because we've seen very strong moves to the upside as well as downside, which can just run through all the liquidity. So
that's a good point to make because the markets are so thin, guys. It behoove you to leave bids and asks at certain levels. It's much more prudent, even though you might not get the best entry. It's much more prudent to leave alerts for certain levels that you want to do business at and see how price reacts at those levels. Because leaving blind bids or asks, at least for the majority of your position, you can maybe scale in 10, 20% at certain levels, but there's a higher likelihood because of how thin the markets are that you're just going to get ran through. So to avoid that, set alerts, let things play out, see what happens when it gets to those levels, and then make your decision in real time versus just blindly leaving bids and asks.
Yeah. So now if you look at a 7-day BTC liquidity heat map, we'll start to get a little higher time frame picture of like really where price could gravitate to. And like if you look at this 24.5, right? Like this is that lower bound on the liquidation levels we looked at, which would give you like the strong sweep.
Yep.
I could see this, like as much as 23.6 is a magnet, price takes the craziest paths to get to those really big magnets, right? So I actually could see, and again, I'm not going to leave bids here, but I could see this sweep of 25K being a potential long, and then maybe you do go up to these, right? And like that would give you the fuel to come down to this one. And if we look at it on a monthly, it's going to be obviously much brighter. Can price go up into this bound up here, like 27? Yeah. And then it starts to become pretty attractive on a short side because you have a gap. We know the 200-day moving average is a big one. Can it push all the way up here? I'm not really in the camp of that, to be honest. I think you can get 26.9 at best, maybe. But like 26.7 is your like brightest liquidity to the upside. And then below that, near term is going to be that run of 25K, right? So you can start to see how, like, when you look at the different time frames in concert with the liquidation levels that we looked at, where we look at the lick delta, how you can kind of start to map out the areas of interest where price is going to be able to take out the most market participants and move it to their advantage.
Exactly.
So now we see this 25.2 and we see the 25.1 and look, 24.8, right? And then what? You have a gap down to that really
all
big
the way
pocket.
to the key
This is
unit.
probably a long to me. Like, this is honestly probably a long to me. And you need to watch it here. But like, then again, your nearest liquidity to the top side from like the monthly that's attractive is 28.5. Like, this is a huge move, but you do have this resting like liquidity here, 26.9. So to me, I could see sweep 25, go to 27, really fake everyone out, and then you come down here. That's kind of how I actually think about the way the market might move if it just doesn't die here. But you still have to build up a considerable amount of shorts down here, in my opinion, which there's not a lot.
Yeah,
So,
you have to keep in mind, we squeezed a lot of shorts, myself included, on that grayscale news, right? So like, just because the market retraced a full move doesn't mean that like everyone got real short again at the top and held all the way down. Like, the market positioning is still net long, right? And we see that from the liquidity profile.
yeah. So that's a pretty detailed analysis of the liquidity on BTC, and now we can look at the liquidation levels for ETH. I don't know if you have the spaceman levels up on BTC, Zorn, or like anything
Oh
short
yeah,
term,
yeah. Let me pull them up. So we
low
just did
time
it on
frames. So maybe those coincide with that 12-hour pocket. Like, I don't know, the Monday. I haven't looked at that yet.
Yeah. So just so everyone's here, I'll show that real quick before we go on to ETH. Where is it? Oh no, not there. Here. So Monday high right now is 26.9, or just shy of 26.1K. And the Monday low we already swept a couple times now at 25.6. And the weekly open has not been retested, or it has been, sorry, had retested, but it is at 25.971, which is basically 26K. So, I'm not in the camp that we're going higher first. I really don't think we're going to sweep the Monday high, just because we came for the Monday low several times. We're about to start consolidating below. I'm still very bearish. I think we're going to go lower before we go higher. This sweep of the Monday high could happen later in the week, but I think, like you're saying, it would make a lot of sense to go below 25K, probably even run this low we have here from the bottom, right? Before that grayscale, or before the BlackRock news at 24,750, I could see the long setup being like that: a poke below, and then you go back up to 27K or 26.1K, whatever the case is. Keep in mind, that's like a $1,400 move. If you swept 24.7, just a wick below, and you reclaimed it, maybe you long 25K and you're playing back to 26.1, it's still $1,000 move, which is, in all fairness, that's a fair BTC move. Now, if you did come above this Monday high at 26.1, you came up and you came back down, like we're saying, sell the rips. This is as clear a short as any right here. And then I really don't think that at this juncture that the Monday range has given us anything really to work with so far. But yeah.
Yeah. So again, like here we are with ETH. Like we'll do our checklist. Well, is anything telling us that important on the ratio 204 to 212? No. Is the delta what it used to be for shorts? No. Are we just like in between, just like we are BTC, or like roughly range high, range low? I haven't looked at a 12-hour liquidity heat map, but I'm willing to bet that this is probably similar to what we just looked at with BTC. And with ETH, you have 159 million in longs. Okay, so down here there was what? How many shorts were here? 273 million in shorts, and it went from 1610 to 1647. So it
So that's
doesn't
the interesting thing, right?
take
It's
that
like
much
ETH
to move.
BTC moved up, and ETH did have that move up today. And I just want to switch to the chart real quick because look, guys, we swept the Monday high on ETH. Like that move today at 1647, like that was the sweep of the Monday high. And if we go by kind of cycle theory and all that, ETH has been kind of following suit on what crypto cycles have been versus what Bitcoin has been. So this Monday high sweep on ETH is kind of like the trigger for me that like, okay, Bitcoin didn't get there anywhere near there. That's because ETH BTC is bullish. They're using ETH BTC as that proxy. And like we were saying, that to me is a bearish thing because once we get down to that 24K liquidity at 23.6, ETH's going to make that first dead cat bounce higher. And that to me is inherently bearish. So, now that I see this Monday high sweep on ETH, I am not in the camp any longer that 24.8 or 25K sweep is a good long on BTC because we just had that move on ETH, essentially what we're looking for. But yeah, continue, Trip.
Yeah, so if we flip over to the 12-hour heat map on ETH, right? Where's our upper band and lower band? 1660, then you're hitting a huge gap to basically 1680. But again, like there's not that much fuel here, mainly because there's 400 million longs on ETH, if I'm correct. But like right here, 1630, boom, 1600. This will run 1600. So I don't know. ETH can go to 1600 flat, right? And then it's got a little bit of a gap here to kind of get to those higher 1500s. And if we looked at like what we just did on the liquidation levels, like here's your lower band of liquidity, and your, I guess, call this your upper band of liquidity. But to your point about the Monday high being ran already, like that makes sense that this liquidity is probably next, given there are longs, and we just the fuel is, there's a gap here where the gap is smaller here, right? So now we can look at the 7-day on ETH and see what the bigger picture is in terms of like how that looks. And so, all right, we have a pretty big pocket here at 1660 and 1655 going up to almost 1700, right? Interesting. Price like tried to come into it here and didn't
Make
hit it.
it. Yeah.
Yeah. But given the 12-hour profile and the heat map we just looked at, like this 1575, 1580 is that like lower bound of liquidity that like I think price needs to come down into this like sweeping 1600 for it to even attempt to try to hit this stuff, right?
Yeah. It doesn't have the juice to get up there right now because we tried that earlier today, right?
Right. And so I
Failed.
think like if it was going to happen, it would have happened over the weekend when the deltas were really telling you that maybe there's an opportunity for this to squeeze, but you just didn't get it. So when I see that, or when anyone looking at these types of things, I think you need to just like reassess and be like, well, it doesn't seem like the juice is there. Because all of this stuff is very perp driven versus like there has to be news that comes in to be like spot buyers to come in, but that typically is in the same time the market is really short, right? Like we've seen the big moves in from news announcements. It's not when there's like a green delta on BTC or ETH.
No.
It's so they all work together. So this area seems like it has to be hit before you even try to come up to hit this. Looking at ETH, and then now we'll look at the 1 month to get like, all right, where's that 23.6 on ETH, that big 23.6 liquidity pocket on BTC? Where's that sitting on ETH? And so that is 1480. That's the brightest kind of picture. And what is that? Well, that's the 61.8 Fibonacci of the whole entire move. So this is actually a very interesting area to me. And if ETH BTC is going to be showing strength, then maybe it doesn't drop as much as Bitcoin, but we'll see what happens. But again, like your liquidity on the monthly basis, like 1660, 1690, then you're hitting a big gap to try to even get up here. You're much closer to this right here, and these monthly liquidity pockets are much more powerful, and that would bring you to like this like 1570 area, which is what we saw on the 7-day and also the other chart. So there's multiple areas of interest on different time frames, but I think like the overarching argument here is like there's reasons to think it's going to go down further, that because that's where the brightest liquidity pockets are, and we know that losing trend, uptrend, like market structure, all sorts of things. And that's probably a lot for everyone to digest, but like this is how we analyze like price, liquidity, and the charts.
Yeah. So, with that said, I just want to touch real quick on the ETH chart on a higher time frame, right? So, yearly opens around 1250 something, just shy of just around 1200. But again, this is a candle that opened up at 1289 with a very small lower wick, if not none, at 1289. And we did look at that liquidity pocket, Trip. If you want to bring it up real quick, that even below that 1500 level. That 1480 level, there is a pocket on that 1 month all the way down to 1300, just about, right? 1330, 1320.
Yeah. And like this, dude, we hit like a monthly liquidity pocket and it went right through it, like when we had the big drop. So like there's no reason it can't just go 1440 to 1300.
So that's my point, right? And I mentioned that now because look, if we look at this low, right, like this low at 1369, we made like a marginal higher high above here, and this quote unquote higher low is not safe to me. Price is going to fill in this gap, in my opinion. So the only saving grace here, and again, why I look at ETH compared to BTC, is that ETH is already at its 50% fib, so it's dynamic Kijun on the weekly at 1616. Tagged it here at 1570. It has been holding it, and this is like the fourth tap now. So from that perspective, again, BTC is less bullish than ETH. ETH has been holding market structure all year. Even from last year, from the merge, it's just been in this range, right? And people have even claimed that ETH bottomed in June, whereas BTC bottomed in, was it October, November with the FTX stuff. From the timing aspect of it, I think it was from top to bottom, it made more sense where ETH bottomed than when BTC bottomed. BTC bottomed later than quote unquote usual in the cycle theory. So ETH bottoming here in June, kind of making this weird range and then kind of doing its own thing market structure wise. So ETH is definitely more bullish. It's defending the weekly Kijun, which you want to see from a bullish point of view. However, I do think that even though it's holding up well, I do think BTC is destined for lower. And if ETH is going to follow BTC, it makes a lot more sense that it's going to go attempt this low, potentially even try to fill in this gap right here. So that's kind of why I'm thinking that BTC is going lower. But when it does actually end up going lower, let's say BTC goes to 20K, 17K yearly open, ETH BTC is going to go up, and then maybe we just tap below this low, fill in that gap we just talked about, and then go higher. So for me, ETH is obviously going to be the better long going into the rest of the year if you are taking longs. But my macro bias and just my general take on the market is that there is no bullish catalyst from Bitcoin. In fact, there's bearish ones, right? There's spot ETF is probably going to get pushed until March. Mt. Gox coin's getting released. And I think we even have, right, like next week or in 2 weeks, Galaxy is helping FTX Estate start selling like $700 million of BTC, 500 mil of ETH, and 200 mil of other random shitcoins like Solana. So there's a lot of sell pressure coming actually into the market, guys. I don't see the catalyst to go up. If I was to contextually just look at this chart without knowing the Bitcoin chart, I'd be like, all right, ETH looks great. We're probably going higher. We're going to, we have the cross. We just need to close in the cloud, get above the Chiku span, and maybe we try for 2,800 to 2,600 on ETH. But, given the macro backdrop, understanding where Bitcoin's at in the cycle, et cetera, I don't think that's here for sure at any point in time just yet. But yeah, guys, I think that's kind of the down and dirty on BTC and ETH. If you guys want to drop some altcoins in the chat you want us to look at for both short and long, you can look at some liquidity profiles, kind of leave it up to you guys, kind of pivot the chat. We can even do some Q&A. Leave it up to you guys to kind of direct the rest of this episode.
Yeah, and keep in mind, like, this may come off bearish, but it's just really the signals that we're seeing. And I don't know, this isn't the first stream that we've been kind of discussing why we think price is going to go down. But the analysis should be dynamic. So if things happen in the market or things change where, okay, maybe it's not so bearish, but like for the time being right now, it's not showing us anything to where we would be saying anything otherwise. So it's like you don't ever want to get stuck in your ways, but you do also have things that you've been watching higher time frame or like maybe a couple checkpoints. So for me, it was 200-day moving average, like uptrend. We lost that, like the game changed completely. And then the news follows, right? So the game can change fast again, just as we've seen like in June when the BlackRock stuff came out and everyone thought it was over, but we were still holding those 200-day moving average and the uptrend, right? So there's been a big shift. And understand that like you can still trade this, but you really need to be disciplined in the approach. And that's why I think liquidity is such a good, useful tool with being disciplined and just booking your profits, because you have very specific take profits on the chart, as well as like here's
Entries
where you
as
run
well.
out of
Yeah.
steam, right? So you're essentially trying to get in and out and being conservative with your targets. Like don't pick the bottom lick on the thing, right? Pick like 10% off the bottom, like if you're looking at the bands, right? Or just maybe it's the 25x big pockets, right? Like those 50 100x, we know they get hit, but you don't always just run like the gamut on both
Everything.
sides. So
Exactly.
and this is even more particular to altcoins, which we're in a lower liquidity environment, and that becomes even a more precise game because the PvP nature. I mean, this is exit pump season. Look at what we've seen. Like, look at some of the like YGG, like the coordinated pump
June,
and dumps. Like,
Bluesell,
yeah,
etc. All
you
these
don't
negative funding, Binance cartel coins, guys. Like
right.
this,
If you
this
look
is the
at the
time for it.
right, if you look at the wolf, what he cryptic messaging about like what where are the actors, I don't know, whatever he's saying, but like he's on top of that negative funding, understands that like insiders are really trying to get out and they're going to pump it. So just in and out of these trades you can still make money, but like don't marry
Don't get
the
attached to the narrative or the bag,
yeah
right? Don't marry your
or,
bags.
or any of that stuff, because like all you're doing is trying to survive through this time, make a little bit of money so you have capital deploy when the trend actually does shift, and you can take more high conviction bets into a trending market. Like the only thing we're trending in now is down, and shorting is hard for people, which is totally understandable.
It requires good
Um,
timing, and that's the important part.
yeah, so longing a bull market is way different than shorting a bear market, and I think a lot of people's minds, especially new traders. So yeah, or even just you can paper trade a lot of this stuff and start to get a better sense of how liquidity theory works and become more comfortable with the skill set and building kind of those tools where you can use them, whether it's end of this year, next year. I don't know when it's going to happen, but that's one thing is like anyone who's new to the channel, newer trader, like practice makes perfect with a lot of things, even though no trader is perfect, but you can at least get closer to your goal and your system. So
That's the thing,
I
right?
know.
Like you can learn everything. Like we offer a curriculum to educate you on how to trade, but like it doesn't mean jack shit if you're not going to go out there and click and trade for yourself, right? Like you can learn everything in a textbook, but until you actually go into the field and kind of put your knowledge to the test, it's not going to matter, guys. So the point is like get comfortable clicking, be willing to take losses, and that's why we harp so much on managing risk throughout our curriculum, because you can't play if you don't have any more chips. So the key is to have enough chips to continue playing until your edge shows itself, shows its hand, and then you kind of risk more when you see your edge there, a repeatable setup to kind of play out. But with that said, what do we got here? Let's see. Matic looks like the first one we're going to look at. You want to take a peek at the liquidity profile, Trip?
Yeah, except someone asked for ARB, and it's easier to go through alphabetically
Okay,
sometimes.
go for it. Go for it. Let's see here. ARB.
All right, so let's look at ARB, Binance. A lot of these altcoin charts, man, there's not. They look sick. All right, so I think we're going to see something similar across the board, unless we find some outliers, and maybe that comes from going back to what that Hyblock episode last was, like looking at the coin screener and then trying to maybe identify some histograms where there's positioning that the market is showing you an asymmetric possibility for a return that doesn't look like every other altcoin. But
Exactly.
with total shorts at 159 and total longs at 206, let's just go back to here, and 54 million in shorts basically built up, let's say. And this is kind of like what the move I think a lot of people were expecting maybe in BTC off that like larger delta was a spike like this, right? So what did we trade? We did, I don't even know the percentage on this. This is 87 cents to 93 cents, call it, right? This was your squeeze. And then look what happens. Like you wait for a delta flip, 47 million in longs now. I mean, here's your resistance, right? Like this is TA and liquidity theory on this chart. And then boom, you just run the longs again. And look, now it was, what is this? Like a very small amount of shorts, 3.3 million to go back up to here. And now we're building longs again. Where's price in relation to the nearest liquidity? Well, you got to get here to hit 90 cents is your next lick up here. And then you have all of this, right? So if BTC and ETH pull back to the areas we think, and ARB has 22 million in longs off a squeeze of 3 million in shorts, this is a pretty high conviction bet that this is going lower. Does it mean like market short here? No, but it's just this doesn't seem like an attractive thing to even look
To
at.
be honest, the idea of market shorting there doesn't actually look that bad. And I was
It
going to take a
doesn't. What
quick
do you
second.
can put your stop like above here because like I guess I don't know.
Well, no, here's
I don't
why.
look
Because
at the
just like
chart
we
though.
talked about the coin screener last week, right? I'm looking at ARB here. ARB is heavily longed, right? It's closer to that upper bound of 79.75% of all the positions in on BTC. I mean on Binance for ARB are long positions. So that means if this was BTC was to go lower, 80% of the market is long, only 20% of the market is short. It's a higher potential for a long squeeze. But yeah, continue on that.
Not
So our
financial.
ARB doesn't look bad for that. Yeah, of course, of
Do you
course.
have a chart? Because we haven't even looked at the chart yet.
Oh, true that. Yeah. Hold on, actually, that's a good point. So chart of ARB, right? ARB daily, obviously. What kind of chart is this? It's making lower lows, not from the opening price, but this is just a steady downtrend. Zoom into the hourly. It looked like it kind of attempted an edge to edge here, but still below the cloud. You don't have the bearish Kumo bearish Kumo twist, but turning that off, throwing the little spaceman levels on. We have a pretty wide Monday range. It's actually really big. Monday high and Monday low is pretty far and wide apart. And now you're trading back into the weekly open. Looks like you rejected the weekly open. So, when you were talking about, your stop being somewhere above there or whatever, I do think that if you reclaim the weekly open, you probably go for the Monday high. But as long as you're below the weekly open, maybe this is your deviation stop loss, you're probably going to go for at least the Monday low. And then I don't know, how low did those licks go, Trip?
Like
What dollar
84.
price?
84.
Yeah, 84. So let's just say it's, here. That's not a potentially bad move if you think BTC is going lower, right? Let's just theory craft for a second here. Let's say you were not saying you should market short, but maybe your hard stop is above 91.40. Your manual stop is if it reclaims the weekly open. You're playing down to the Monday low first, which is not that attractive, but if you're playing down to 84 cents, it can potentially look attractive. Now, again, that doesn't mean the setup's going to play out at all. This could easily, deviate back up, reclaim the weekly open, and then go for the Monday high. It really is going to depend, guys, what your bias is on Bitcoin. We're just showing you how we would potentially craft a setup using the metrics that we have, using the liquidity profiles we have, and then pairing that with technical analysis. So that's kind of how I would approach ARB.
The weekly open is like that single lick that the closest. It has to go to the weekly open to get any licks, really.
Yeah, exactly. So that's why I think once it starts getting to the weekly open, you probably cut that for a loss. Maybe your hard stop's up here, and your soft stop is somewhere above the weekly open because you reclaim that. The likelihood that you're going to sweep the Monday high and potentially go for maybe this lower this lower high up here becomes that much higher. But again, it really depends on your bias on Bitcoin, and that's how you should be approaching these alts. Is hey, my bias on Bitcoin is to go X, and I want a higher beta play, so I'm going to trade it by going Y, right, on this asset.
Yeah, I think you ran the weekly open and it was an over under. If you look at those
And
candles,
that's what it looks like to me. So I'm more in that camp of like, hey, just market short the news.
if you
Market
draw a
short.
diagonal on the daily, so pull up ARB on the daily. This is sometimes what I do in terms of like if you take so yes, zoom out a little bit. Yeah, so see the lows in May and June.
May and June. Yep.
Yeah, so draw a diagonal there. Yeah, that you arb lower target to me is it will bounce up. I'm not kidding, dude.
69. I believe you. 69 cents, the meme number. Give me that, right? All day. Now, that doesn't mean you can take that, 91-cent trade and say you trade it back down to 69 cents. But, there's a way to manage it from a potential scalp trade based on liquidity profiles to, hey, I kind of want to swing short. And I'm going to agree with you. And the reason why is because when I throw on Ichimoku, turn off Spaceman, right? And I'll use a 12-hour. This is trending lower. You have all the prerequisites. So anything close to, you tapped the Tenkan-sen once already. You are going to trend lower, and maybe you're obeying market structure. So maybe this should be your invalidation, 93 cents. But again, that Monday high, or sorry, that weekly open reclaim, you're probably going to go for that Monday high, etc.
Yeah, I just think there's a desperation for squeeze on things because people have been long biased for so long, and like they want it to happen. It's like a hope trade, but it doesn't really set up for it right now based on like if you have your bias rate BTC and ETH. They might not go down like immediately, but like it just seems like it's in a bleed mode. So,
yep.
All right, ARB. So whoever asked for that, that's a pretty.
Let's do DYDX next, just because that is one of my trades, and that's alphabetically along that. So if you want to pull up the liquidity profile, I think I have my setup still on here somewhere. Where's DYDX? Somewhere. DYDX. Yeah, there it is. Okay. I don't have the actual setup on here, but this is just from an Ichimoku perspective. I took this short, literally Pico top, 22.272. And the reason being is because it was on this 3-day Kijun, right? So this yellow line is mean reversion for the entire trend that we were above, fell below, and now we retested as like an SR flip, right? So you could do an SR flip like that. I like the 3-day Kijun just because it made a lot of sense. It hadn't been touched yet since we went lower low. Finally came out to retest it. This 3-day candle, I feel like in the next 1 day and 2 hours, will probably even flip red and go to target one of 1.7 for me. Final target being the yearly open. But DYDX, sorry, that's the high time frame overview. Rejected off the 3-day Kijun. You zoom in, this looks like a bearish retest coming into here. And then in the cloud chop, lower time frame. I guess it's in the cloud. You could have an edge to edge to 2.15. This kind of already did that though, so I'd be cognizant of that. But what is the liquidity profile saying, Trip?
So this one, it still has a red delta. So I'd be curious to look on the coin screener and see if there's anything more telling versus spot versus like perps. But you've been building.
It's completely even, by the way, the coin screener. It's 56% long, 44% short. So there's no clear edge at current prices on DYDX skewing one way or another. It's actually more long technically, but based on the delta you're showing me there, I'm not seeing it as an attractive short from current prices.
Yeah, so 46 million. I mean, you were kind of peaking around 67. I don't know, average like what is this? 50 to 60 million in shorts. This is setting up for like maybe a short-term squeeze, right? But the coin screener telling you not so much. If BTC does squeeze and ETH does squeeze somehow, this is probably going to squeeze, right? So I would say just based on this alone, they're shorts, but the positioning though is pretty split based on the coin screener, right? So if we drop this a little bit, you can see if there's anything more. So 16 to 6. I guess I think you're short for much higher up though, right?
Yes.
Yeah. So,
but yeah, 2.27. So yeah, right on that. Yeah, that 1.1 mil lick.
Yeah. All right. So I don't know. Like this one, I'm not going to say is like overly positioned or is positioned like mega short, but there are things to squeeze. So just be cognizant of that if you're looking to short DYDX. If there was any spikes in this, it would probably be a pretty good short. There's also some pretty big unlocks coming for this thing. I think like October or November or something. I forget how much money is coming onto the market, but supply pressure is real. Maybe that's why there's people aggressively shorting it. But timing these things is obviously pretty difficult. What was the next one?
I think Matic. I don't know if that's in alphabetical order.
I think someone asked for FET, but they don't have.
I don't think they have. Yeah, they don't have liquidity.
Matic. We'll look at Matic. Everyone loves this one.
We got a question, Trip. If we're doing any discount codes for TOTT right now, should we give them one? Should we do for the chat? 20 off?
For the actual crypto?
Yeah.
Which we never promote.
Well, that's what I'm saying. That someone asked about it. Well, might as well, right? All right, let's do 20 off in the chat, guys. Code is 20 off or 20% off because you guys are a bunch of beasts. But yeah, sorry, continue.
Okay, so someone said 25% discount.
There you go, Smith. No worries, man.
All right, Matic. So, let's see here. We're building some longs here, guys. So this has what roughly? Damn. What did Matic squeeze a lot or something, or just?
I think it did. Yeah, I'll pull up the chart in a sec. Let me find it right there.
So 100 million in longs, and so 282 to 113. All right, so right off the bat, we know that the notional amount is almost 100 million in longs. That's kind of scary if you think that BTC and ETH are going to drop, because I don't see how this is going to outperform the market. Personally, I haven't looked at Matic BTC, so that would also be interesting if you want to pull that up, Zoran, as well as the chart. But here's this is the way you should look at it. Yes, you are making higher lows, market structure wise, here, we're marching up. To me, this is just creating liquidity of stops below, right? So here's your high. You could say that this was your low to kind of hold market structure, right? If we're looking at this pattern, well, you just ran that, right? And then lower high, lower low, right? So this could be the start of an actual reversal in trend.
Break in market structure, yep. That was the first break.
Yeah. So I would say Matic short bias based on this. I haven't looked at a chart. I don't know what but it's very interesting to see this many longs on Matic right now.
So here's the chart. Let's take a quick look here. I also am short bias just based on that. You did have an attempt at a Kumo breakout, but then you broke back inside the cloud. Just drawing a random diagonal, it looks kind of like this is the SR. You can draw it back to here, right? It looks like that was support or resistance, support. I tapped it again as resistance. You do have the prerequisite for a Kumo breakout being, here and here, but you haven't actually broken out of the cloud. So that's why potentially you might get clipped, but using this as invalidation, if you think that, like Trip said, this was your higher low, that was your higher high, and then you broke it with this. So you broke market structure technically here. You're looking for an entry. Maybe it's along the cloud at 56 cents. Maybe it's 56.10. Are there any licks that are actually right around 56 cents, Trip? Because it seems like that could potentially be a good short.
Yeah, you have a 25x. There's 1.26 million. 25x at 56.7. That would run this high, 56.
Okay, maybe not. I'm thinking more 50. What's the closer one? The 56, even right there, the 100x right above price, kind of. That's What's that one?
This one, 56.
Yeah. Okay. So yeah, I like that.
56
so
too.
Potentially, right? Let's just talk potentially. Theoreticals, not financial advice. Let's say we're going to short 56 cents with the stop above, that high that we just talked about, because that's the potential SR flip. What are you playing to, right? So what are the lower licks going to, Trip? Obviously, you're going to, run through here, bunch of stops. Maybe running back down here to 54.24.
Yeah,
does that look feasible?
But you could go to 52. You'd really do some damage.
Oh wow. Okay, so there's licks there. 54, and then
what does the daily chart look like in terms of just? Oh, I haven't looked at it.
So let's say daily chart. like it's making lower lows. Like it probably fills in this wick at 50-50, right? This wick right here is attractive to me.
There you go, 50 cents.
Yeah. Are you going to get it from here necessarily? Maybe. That would be a very epic trade if you're going to trade from here all the way down to 50 cents. But is it feasible, realistic that you're going to pull a 8-9% move with a 1% stop? Maybe. That's again if you think BTC is going to roll over, and that's why we talk about, guys, this being very, very key for you to have a bias on Bitcoin. If you think BTC is going to roll over now, you're playing with tighter stops, tighter invalidation on these alts. But if you think BTC is going to continue chopping around, then this high is probably not. This high as a stop is probably not safe, and you want to see what happens when it runs this into maybe that 56.770 level that Trip mentioned. You come up into here, and then you get back down, and then use whatever high as invalidation. But point being is you have to have a bias on BTC in order to kind of take these trades. So if you're going to take a shorter term, tighter stop trade like this, your bias is Bitcoin's going to roll over within the next day or so. Whereas if you're saying Bitcoin's going to chop around more, you might get a better entry on Matic or some other alts.
Yeah.
What settings am I using for the Ichimoku cloud? So my settings are standard that I've been using for many years now, since 2015. Just to show you guys, it's 20, 60, 120, 30. I talk about this at length in the Tools of the Trade course, in course 2, module 3, and then course 4, module 5, when we talk about Ichimoku strategies. It's 20, 60, 120, 30. So that really all that's saying is that, the traditional crypto settings, so to speak, are 10, 30, 60, 30. And why do I double it? It's because it gives me less signal to noise ratio. So essentially, if I'm looking at, and I'll go back to BTC just to give you an example why. On BTC on the daily, if we throw on the Ichimoku cloud, there's not much to see from like a noise or from a signal perspective. And what you're really looking at on the daily is you're looking at daily price action transposed on a 2-day Ichimoku cloud. So in theory, right, the theory in my mind is that if you're looking at price action on a smaller time frame compared to the cloud, when it actually interacts with the cloud, it should be a stronger signal. So that's why I prefer to use a 12-hour for all my actual trades, is because what I'm looking at is 12-hour price action transposed on the 1-day cloud. And if you notice, you can backtest this for yourself. I have many times edge setups and Kijun bounces and rejections. 12-hour Ichimoku cloud gives you this beautiful line at 27.7. This is the 12-hour price action transposed on the 1-day cloud. So the 1-day cloud has a Kijun at 27.7. That to me was a good spot to kind of hammer it in and say, this is mean reversion on the 12-hour time frame for the 1-day cloud. That's a strong signal for me versus waiting for potentially on the 1-day for it to go to the 2-day cloud. So that's kind of the reasons I use those settings.
Yeah, so someone asked about Sol, which is interesting because when I woke up this morning, I saw Raj or whatever tweet like Visa has chosen them for the USDC settlement, payment settlement, and price didn't even move. And then CoinDesk put it out and went up 4%. So that was my fault for not creating that. But it also was like, wow, it hasn't moved. This is insanely bearish.
Yep.
So, if we look at it, and you can pull up the chart, but if we look at Sol liquidity, this is starting to now look like, okay, squeezed some shorts. And it's really important to look at the base of these things. There's only 30 million in shorts. You've now created 380 million in longs, okay? On a news pump, which as we know, most of them all retrace. And if you have a somewhat bearish bias in the market, Sol should be on your radar as a short trade, in my opinion.
Agreed.
Is it we're doing it here? I don't know. I do kind of think that one, how bearish the stream has been. That's a very good indication of we probably squeeze. And so if my thought is if you get 26.1 liquidity pocket on Bitcoin and 16 whatever, 60 on ETH or whatever that would be, even though we've taken the Monday high on ETH, and if Sol comes up into let's say here, 20.
No, go higher. Go to that one at 21, and I'll show you why after. Yeah, I like that.
20.9. Okay, so you're going to really start to get mega offsides. This could go to 500 million in longs. You've hit the exhaustion points on BTC and ETH into basically those traps that longs will buy into. Sol would probably be a crazy good short because they just used a bullet on pumping price from 19 to 20.5. And like maybe this is a little bit of a bull flag, like low time frame. I don't know. We'll see. Like
So yeah.
any spike on this, I would short. Like
So I really like that pocket you just mentioned, and the reason being is up here, right? So look at this, guys. Market structure, right? So you had your high, then you had your low, you had your high. You make a lower low here. Here's your lower high here. Then your another lower low here. This is again another lower high, kind of almost equal with this, but still lower. And then you make a lower low here. Now you come into this zone, which is a low volume candle. This is your Tenkan-sen. You're coming up into it. So, this DB or SSR zone that we like to call, which is basically sellers support or sellers supply resistance, goes from $21 to $20.6. So anything into this block or this Tenkan-sen is for a short. So if you caught this short up top here, great. If not, it wouldn't surprise me, like Trip saying, you push up maybe on the next 12-hour candle, you come up into here before rolling over. And again, you can use this as your invalidation potentially for the short back down. But these lows, in my opinion, are getting swept. Are you going to go back wherever? But point being is like, I like what you mentioned, Trip, that liquidity pocket at 20.9. That kind of lines up with this SSR zone that I'd be looking to short.
Yeah, I mean, to your point, like 22 is like it tried so many times and broke down. Like, and what did you have? You had at the 20 point, like the bottom wicks on. If you're looking at a 6-hour chart, I'll share this because I look at Sol a fair amount. Can you guys see this?
Yep.
So what are these? Your 20.6 and then your high is 21.05.
Yeah, that's a 12-hour zone I was just talking about. Yep.
Yeah. So we've tested it, but like
you've just tested it, but like you haven't like pulled back from it, right? So that's the thing. You gauge the reaction from the block. It rejected, but it hasn't had any continuation lower from that rejection, which leads you to believe you're probably going to retest it at least one more time, maybe.
Yeah, and the question is do you run 21? Do you run this high? Look, if you ran this high and this traded back below here, this is like a crazy good short. Yep. You could try here and put your stop here, but this is like very, very tight.
That's super tight. Yeah, I'd rather put it above 22 to be safe and then scale in more as you get back in. Like that's not a triple top. Those aren't really like EQ highs, you could say, to like that you're going to sweep. I don't see them as that. I see that as an SR flip from the previous, if you look to the left of that, which was basically the Kijun on the daily.
Yeah, so like I don't even know what the coin screener says necessarily.
Coin screener for Sol says pretty even, 64% long. So nothing that sticks out.
Okay, so let's say you take these lows, which 19, and oh my god, I did it backwards.
Always do it backwards.
This to the swing high up here, right? I think it's 21 is your 61.8. So like the Fibonacci retracement into liquidity here, supply zone. Do you run this high? Maybe. We don't know yet. This whole zone with the fib and the liquidity, like I could just see like this coming up, trapping all the longs, targeting that liquidity, and you could have a pretty interesting short setup on Sol. Then you're playing down to probably the SR flip. I don't know if you said this. I was just looking 1980. But the reality is like if you think
you're going to sweep you're going to sweep those lows and go lower. That's what I was going. You go for the block at like $17 basically.
Yeah, and that's a swing short on Sol. So again, we're looking for the offsides positioning of people. You just got it on a news pump. What happened on a news pump with BTC in the market? Pumped. What has it done? Bled down. It's like almost foreshadowing of what Sol is going to do, in my opinion. So that is going to be something that I'll be watching pretty closely. What was the other one? I think someone wanted to look at
Rune.
Oh, I'll look at the liquidity. You can look at the chart, and then maybe we'll do one more because it's been an hour and 20 minutes, I think.
Yeah. Well, I'll leave them. We'll end with this one. I'll leave them with the coin screener to kind of throw a few at them to kind of look at themselves.
Cool. So
Rune. Let's see.
Rune.
Get out of the way.
Share this tab. Sorry, we're still on Sol. So this is a 105 to 173 or to 73. So again, like okay, there's shorts on this. we squeezed some. There was 53 million, and now there are 20 million. So, like, the ratio is not telling us that much, but it is telling us, like, to me, it can go down, but I'm much more the guy who likes to short a green delta, because like look at like what we just saw, like some of these squeeze off low notional amounts to where they like go up here in green, right? That's a higher probability play to me, even though liquidity is 151 and like you have all this here. I haven't looked at the chart, but just on this chart alone, looking at those two variables, like if it were to spike up here, I'd feel much more comfortable trying to
1.6.
because you haven't made a lower low. I guess you could. Here you're marching up. Maybe this is the start of a market structure breakdown. I'm not entirely sure. Zoran, what's the chart looking like?
Yeah, so I don't necessarily think I do like the short. I'm still short from $1.70 almost. Just because I think this was the blow off top. You know, I got squeezed once and then I caught a good short back down twice. Then we had this move back to my entry. But point being is, you know, it's in the cloud right now. It does have the prerequisites for the edge to edge technically, but it kind of did that edge to edge here at 152. You know, you talk about, is that the market structure break we just had? It's not a full market structure break till it gets below $1.49 ish.
Right.
But it looks like it's in the process of that. So I wouldn't necessarily short it right here. I'd let the market structure break happen below that 149 level, just to mark that out. I let the market structure break happen below here. So I'd let, you know, this come below here and then maybe short the retest of this level where price is right now with maybe an invalidation above here. Because like you're saying, the market could squeeze up higher with that. So it's not prudent to short just yet. But if you wait to see the break and then it comes back into what could be potentially like an SSR zone right here, that's the short. So, you know, the $1.50 short, wait for the market structure break, wait for it to come back into that zone, and then kind of go for it.
What if you go to a lower time frame, turn on Spaceman, like have like Monday ranges just for people who are maybe trying to get more granular on?
Yep. So I mean, this is the hourly, but you know, the Monday, it's above the Monday high. The Monday low is untapped, still below here. So you know, as long, yes, maybe that's the thing, right? So the market
Oh,
structure
that's the
break
hourly.
happens below $1.40. Yeah. So you know, you wait for the Monday high to get broken back into, and maybe that's your invalidation. So maybe you wait not only for the market structure to break, but you wait for price to trade back below the Monday high, and do a retest, and then you know your stop would go somewhere above there, and then you're targeting the Monday low, potentially these lows. I think you're going back to the yearly open at $1.27, which just makes sense to me here at where is it? Right, yeah, right here, this one, $1.27.
Yeah, I mean,
But
if we
yeah,
turn up some of the granularity, or turn it down at least, wow, for Rune, just to see maybe if there are things that stick out. See, you really only get it on the small positioning, it seems,
yep.
which is largely a component of liquidity in the market, right? So none of these bubbles are huge because there's not like massive positioning sizes in this thing.
Exactly.
Is there anything? Did you look at the coin screener on this one?
Rune, real quick, is yeah. So Rune's actually heavily shorted at, oh, not heavily, but 47% long. So it's predominantly short. So it's not necessarily screaming long or short at based on the coin screener.
So any move up into here, like this high 161 seems, I don't know. I don't know necessarily if you run that, but like maybe if you took a fib from 161 to 142, if you have your chart open, like where's the 61.8 back up? Like is it around like 157, 156? I haven't looked.
I don't
Because
have
then,
my fibs on, but once the 61.8, just so 155, 154 actually.
okay, so you'd probably, the delta would probably flip. You'd get a lot of people trying to long it, and then you'd start to look more off sides. That's how I would look at Rune. And if you're running the 161, well, then you're really getting exhausted. But I just don't think you're going to be able to squeeze to the upper bounds, given the past moves that we looked at some of these other altcoins. How quickly people flip long on this stuff on these squeezes like is pretty wild.
People
So
just like pile in. Yeah.
yeah, and you can look and wait for the delta flip, and you don't necessarily need to like catch the top. Just go low time frame, try to look at a market structure break, and see where it is, and then you can get pretty tight on your invalidation and whatnot.
Yeah. So last thing I want to leave you guys with before we go is the coin screener. We talked about this at length last episode with the Hyblock Capital team. This has been one of my go-tos for just deciding what I'm going to trade for the day. So this coin screener, what we're using as the indicator type is long percentage. We're trying to see, compared to Bitcoin, how many people are long or short on a coin, on any given coin on the Binance positioning. And you see a bunch of random colors. Green corresponds to heavily shorted, bright red responds to heavily longed, and you're looking for outliers. So if your bias is that price is going to go lower, we want to look at coins that are heavily long. So I'll come here to the minimum color scale. I'll put 80, maximum 90, and I'll filter it. And it'll make it very neat to see. So everything is green, and it's only going to show me outliers. So for example, this right here at near is about 79% long, and here dot is at 81% long. So those are and then this one at Sheeb is also 80% long. So those are 3 assets that stick out if you had a bearish bias on Bitcoin that you'd want to short something that's potentially being heavily longed. Now on the flip side, of course, if we wanted to do 0 and say 20 to see what's heavily shorted, filter that to see what's heavily shorted. Everything is heavily whatever, and then wait, nothing is heavily shorted, but let's say 30, for example. Maybe that's a better filter. Okay, so we have some outliers. Blue Zell is being heavily shorted, 32% long, not surprising given the funding rate. FLM is pretty heavily shorted at 27% long, which means 73% short, and TRB at 29% long, meaning 70% short. So those are 3 assets I'd look if you had a bullish bias on Bitcoin, and then Sheeb, Near, and Dot, where if you're looking at a bearish bias for Bitcoin. So this is actually a super neat tool to kind of get a genuine take on what's being longed, what's being shorted. Obviously here you see Blue Zell without the filter. It's the only green thing, which means, again, a lot of people are shorting this compared to Bitcoin. Here as well, FLM, and then, of course, Maker also, interestingly enough. So those are a few assets to look at, guys. We've talked about a lot of different things today. We looked at several different assets. We talked about Bitcoin. We talked about Ethereum. We talked about the general market take. The bias going for the rest of the week is wait for your levels to kind of hit, set your alerts. Don't just leave blind bids and asks. We've seen in thin markets just how pricing kind of unwind one way or another. So be very cognizant of that. Trip, any last parting words for the ladies and gentlemen in the back who are potentially watching, thinking, how do I approach the rest of the week? It's Tuesday. We just retraced a full move from the Grayscale news last week. How do I trade? It's September seasonality. What's good?
I would say that, one, because the stream was heavily bearish, it's probably going to squeeze up.
Yep. No, that's actually alpha, guys. If you see us being super bearish one way, price tends to do the opposite. Not financial advice, but that actually does tend to be what happens. So I'm glad you're calling that out.
Yeah. But again, map out those liquidity bands, use the liquidation levels, use the 12-hour heat map. We know that a run of 26 is going to be hitting to an exhaustion point. Pick the alts that you want to either long or short based on both of those bands, and wait for the barometer of the market, BTC or ETH, to show you what you want to do on the altcoin basis. If you want to trade BTC and ETH, obviously there's more liquidity, less kind of precise in and out quickness. But you just set alerts. There's no reason to stare at price. If you stare at price all weekend, that I feel sorry for you.
Go touch some grass. Go touch some grass. Do both.
And just come up with a plan, right? Go to the coin screener. To the person's point, by the way, I was trying to look at FLM because someone asked about it. So it is interesting that you say that. And that coin has a green delta right now, and it's squeezed like crazy. It went from 6 cents to 12. So it's got 159 million in longs on it. 791 longs to 30 shorts. So maybe there's a lot of volatility in that coin coming, right? There's always a crazy opportunity in the market, and the tools that Hyblock offers for you to dial in where those opportunities are in a pretty simple manner are a lot of the crux of how we look at approaching the market on a daily basis. Echoing what Zoran said. So closing words, be patient, set your alerts, figure out how you want to execute and when, and then do it when the time is right. But don't force trades in this environment.
Love it. All right, guys. With that said, we'll catch you next week. Captain Cole signing out.
Peace out, guys.